Hello everyone, welcome back to my channel. I am CA Meera Joisher, your friend and guide. As continued from the last topic, today we dive deep into the topic on taxation related to all kind of income an NRI earns in India. What are the kind of incomes that an NRI would earn? It can be a simple saving back interest from an NRO. Why I am stressing on an NRO account is the income from an NRE, that is non-resident external account, or an FCNR account, foreign currency non-resident account, are not taxable in India. So I'm talking about only those kind of accounts which are taxable in India. So an NRO, non-resident ordinary account, or you have any kind of rentals in India, you have any business or profession that you run in India, you have any share investments from where you're getting dividends, all such incomes are taxable in India. Yes, why? Because they belong to India. So, if you have any of such incomes which totals up to 2.5 lakhs, 0.25 million, if I talk in terms of millions, Indian rupees this time, then you are liable to file an income tax return in India. Please mind one thing over here. When I'm talking of all these types of income, I'm talking of active incomes which you have actually received, right? There are also certain passive incomes or deemed incomes. Suppose you're holding a lot of investment properties in India, although you have actually not rented them out, but still you might have to pay taxes on that. Surprising, right? So stay tuned, listen carefully. One residential property you can have for your self occupation. Whenever you come to India, you can reside over there, and even if you don't reside, you can declare that this is for my self residence. So, one residential property, if you own in India, there are no tax declarations or no tax discharges required on that. But if you are owning more than one residential properties in India, or for that matter, any number of commercial properties, you have not actually rented them out, but still a deemed rent, which is comparable to a market rent which is prevailing around in that period, you need to add to your income basket and discharge tax on it. Yes, it feels a little harsh, but that is how income tax provisions are. And please be aware of this because many times we miss out on these aspects, right? Besides this, if you're buying or selling any kind of investment, let it be the property investment we were talking about last time, or maybe shares or any kind of investment, all the capital gains thereupon are also a part of your income for that year, right? You definitely have certain beneficial provisions under income tax wherein if these capital gains are reinvested into certain other types of investment like a residential property or government bonds or startup company shares, there are certain exemptions. Exemptions, I mean, you might not have to pay taxes on the entire profit of that particular transaction. So those exemptions are available. They come with a lot of caveats, but definitely are beneficial. So don't miss out on ensuring that whether you want to take benefit of those provisions and considering all exemptions, exclusions, whatever is left behind as your total basket of income needs to be categorized into different heads. The taxes need to be calculated and discharged in India. Most of the cases, there are several tax deductions. For example, we discussed about the tax deductions on the property part, let it be sale or rental in my earlier videos. And for your mutual fund investments or share investments, dividend incomes, in most of the cases, these tax deductions are always there. But the deductions might not be enough. Or there might be some cases when the tax deductions are not happening. So, as a matter of caution, I will suggest if you really have income in India, make it a quarterly habit to compile them calculate the taxes that are required to be discharged, and there is a concept of advance tax, which is a quarterly payment which you are required to make to the government out of your 100% tax which is there due year after. These taxes, let it be advance tax or the year-end tax, all need to be discharged in the form of payments and then filing an income tax return. The due date generally is the 31st of July of the succeeding year. That is, financial year in India, as you all know, is 31st March. So thereafter, by 31st July of that year, you need to make these income tax filings where you declare everything and discharge your taxes. There is one tip which I gave in my last video, that whenever you're making any kind of investment, even if it is not taxable in India, still ensure that you file your income tax returns. So there are two types of returns. One is wherein you are really compulsorily required to file the returns, wherein the income is more than 2,50,000 rupees. And second, where we suggest that you have made any kind of heavy investments, definitely do it voluntarily, even if it is not compulsorily required, because you might otherwise end up with notices, right? Ensure your addresses, etc., are updated on the income tax portal, otherwise, you might miss on such notices. This is all about the declaration of these incomes in India. But what happens to this going back to your home country? Please, please, please ensure to declare every such income in your country as well. Most of the countries follow this rule, wherein if a particular person is resident in their country, their global income is taxable in that country. So suppose you are a resident in US, you are earning your active income in US in the form of a salary or a business income, etc. And you have certain passive incomes, maybe in UK, in India, in Australia. In US, you need to make declaration of every such income added to your income in US, and as per the US laws, discharge tax on it. Now, it is all the more important for Indian incomes, reason being the taxes in India are far low. Suppose a dividend, you have a 10% tax. On mutual funds, you have 10% tax. On capital gains, you have 20% tax. But when I talk about the very same income back in the US, on mutual funds, you have 50% tax. So the taxes in those countries are far higher. And in India, for example, in case of a property sale, you have a concept of a long-term property wherein you have indexation benefits. We'll talk about it in upcoming videos. But these terms might feel like aliens, but important over here is that these concepts are not in US, which means when in India, I had discussed about this in the property TDS related topic, that suppose I have bought a property at 100 15 years ago, and today when I'm selling it at maybe 170, then 100 minus 170, the difference of 70 is not taxable. I need to bring that 100 rupees bought 15 years ago at today's value, which may be somewhere around 150. The indexation thing I'm talking about. And 150 minus 170, the 20 rupees is only my tax. I mean my profit. And tax will be on this profit. But when I go back to US, they don't give me any indexation benefit. When I go to UK, there is no concept of indexation. So over there, 100 minus 170, the entire 70 rupees is profit, and taxes need to be discharged on that. So whenever you are making any kind of income in India, plan out the same discharges in US or a UK or any of your home countries, and ensure that you are not heavily burdened with all these. You definitely have benefit of the taxes paid in India to be taken relief for. So suppose you have paid say 10 rupees tax in India on your transaction, and you had to pay 40 rupees on the very same thing in US, the 10 paid will be deducted and only 30 will be required to be paid. But mind it, you all feel in India, I am done, I'm getting such good investment returns, I'm paying less taxes, and forget everything over here. Why I need to go back in my home country and tell them all this? There is a lot of information exchanges that are happening today. Your entire PAN related transactions, anything and everything that is related to your PAN, let it be a jewelry purchase, your property purchase, mutual funds, debentures, bonds, FDs, everything is transferred to all respective countries where you are resident, and they can access that from anywhere. So don't be foolish to hide things now. Everything is computerized, AI based. You cannot have any further loopholes. So declare it. If you want to really not get burdened with such taxes, it is better you stay light. Offload all such investments in India. Maybe you can have it in the name of your relatives, or maybe you don't have all such investments. And if you have, be prepared to discharge double taxes. But never ever make a mistake of not declaring it in India or in your home country. That is the biggest mistake you will ever feel you've made in your life. You might be bombarded with notices from both ends and put your life into trouble, right? I am sure today's video was really helpful to you. Please like, share, and be subscribed to my channel. We'll be coming up with more videos which will be of use to you. And for that, stay tuned. Bye bye.